Good morning, guys. Welcome to this Monday, June 2nd, and we are already in June, guys. Man, time flies. It feels like the year just started, and here we are in June. So, June 2nd, last month of the quarter, and so far we've been kind of in a holding pattern. We've been sitting here going back and forth. Had a pretty good potential pop. It happened last week, but that was promptly reversed as a tariff pop. And at this point, we have pretty much, uh, pop up here and then reverse right back into value. And that's kind of where we're trading. So at this point, starting off, we are pretty much in the range. We are holding above this area, the 5830s. We can't quite break out of the 5980s into the 6000s, and we are pretty close to the highs here. So I'm waiting for a piece of news of some sort for this move to happen. This is a classic state three development. Markets coming to balance. We are waiting for a piece of news, some event which is going to cause the market to reprice itself and either go higher or retrace a bit. So that's kind of the dynamic we're looking at going into this month of June. News for this week. Today, at least, we have we have some news. Nothing at 8:30, but at 9:45, we get a PMI manufacturing number. ISM manufacturing at 10. Construction spending at 10. Fed speaker at 10:15. And that's about it. 12:45, Goolsby speaking too. But 9:45 and 10, we get news reports come out. Tomorrow, we get factory orders and job openings. We have on Wednesday, we get the ADP read, PMI and ISM services index. We get manufacturing index today, services index coming on Wednesday. Thursday, we get jobless claims productivity. And on Friday, employment situation. It's a big report coming out on Friday. And then we'll see. So there's a little bit of news every day today, and be culminating in that employment situation on Friday. But starting off today, I would start off flat out range bound. We are at value. We have seen the market does on Friday. We traded all the way down here to the 58.50s. We were up all the way up to the 59.30s. I would just start off range bound. I would be looking to selling strength up towards these upper areas at the 59.80 to 90s. I would look to buy weakness down to the 58.30 to 40s. And then let's wait for that breakout to come. And you never know when you get a headline of some sort, it's going to pop the market, as you saw within this tariff headline which came out. It didn't turn out to be anything, but it still got the market in tizzy to the upside. So initially, looking to sell strength, I'm going to start at the 5900s, 5910s, 5915, a small area, but it's just to highlight that mode here from Friday. And then 5925s, 5930s for rotations back down. Looking at buying weakness, 5875. It could be something here at the 5890s, but I would probably wait for the 5870, 5875s, the 70s, 60s, down to the 55s here for rotations back up again. So that's kind of the dynamic we're starting off with. Friday had a pretty good range to it, so that's going to be a good day to it's a good range to start with. And as you see, we can sell all the way up here to that 59.90. So we have range on the upside we haven't touched yet, or we can't see on the chart. And we have range on the downside, down all the way to 58.30s. We can't see on the chart here either. So the definitely a big range to work with. But as you can see, Friday had a pretty good range. And if it starts trading up above this area, the 59.30 and 40s, I would be inclined to lean towards the long side and see if they can retest these highs, potentially take it higher. Still looking to get short against resistance as they start trading this higher. I would just be a little bit more biased to the long side if they start taking out. There's a pretty good resistance here at that 59.40s. But it'll still be resistance on the way up here until you take out that 59.90s. And then on the way down, if they start to pulling back a bit, still looking to buy weakness, even if they take out this, I would probably be inclined to about the 58.50s here, below that 58. 60 and 50, these two support areas, if both of them comes out, I would be more inclined to lean towards the short side and see if they can run it down to the 58 30s. And here you have the 30s and the 15s. So these two support areas are going to be that lower end of the range. But if they start taking out these two support areas, you can see how the range is a little bit compressed. You have levels kind of tied together, and then you see the space out a little bit. So that ends up being closer to that lower edge. And as we get down into the 58, below that 58.15, then we are back. Then we could see a pretty good move to the downside if that starts happening. But to get started, I mean, I haven't heard anything crazy in the overnight. Nothing reacting in a way which makes you. Well, gold is a little bit to the upside, maybe a little bit concerned there, but nothing I would highlight as a major like a red flag or anything like that. So looking to sell strength, 5900s, 5910s, that 5915 level, 5920s, 5930s for rotations back down. Looking to buy against 5875s, the 60s, so 5875s, the 60, I would say 65s, 60s and 50s for rotations back up again. And that's how we get started. Let's see if we get any dynamic, any directional dynamic start developing today. So that's kind of how we get started. Looking at the bonds and the Nasdaq. Bond market not pretty much holding in a range. Hasn't really done much. They're definitely backed off this lower support area. They've been trading up, always kind of flirting with this edge here at the 112.16. Looks to me like they're trying to trade up above it, but so far, yes, going back and forth around it. So at this point, starting off range bound, I would probably keep a slight bias to the downside if they stay below this area, the 12.16s. But this is a little dynamic. This is a little area which is now coming to balance. So even if it's below this bigger distribution here above it, or preceding it, this one is coming to balance, even if it's on the lower end of the range. So I think if anything, you can have a slight short bias below the 112.16. So if they start keeps below this area, then I would be more inclined to see them test the lows than retracing. But at this point, starting off primarily range bound, just a slight bias to the downside. So I would look to sell strength, 12.14s, the 20s up to the 25s, rotations back down, not more than that. Not even, maybe even up above 12.20s, I'll take off the short bias. Because right here is where you have that edge. And if they can, and you can see they've been probing it to the upside. Definitely if they take out the 113s here, 113 and 113.05s, and I will be back on the long side looking for a retracement up towards that the attractor at 114.16. But at this point, looking to sell strength against 12.20s, 25s, taking off the short bias above 25s, and still looking for shorts against the 113 and 113.05 to 6, but not as aggressively. And on the way down, looking to buy against the 12.06s and 112s for rotations back up again. I think if they start trading below 112s, we are heading lower at that point, and I would just stay on the short side. So that's bonds. Kind of not a whole lot of movement in the overnight. That's a little bit of a drift to the downside. Looking at the Nasdaq, that's the one which has been really rocking back and forth. And you can see here on that little tariff, the little big freaking tail we have going here on this one now. The big pop last week and then a complete reversal right back down again. And then it has been going sideways since. So you can see this area of volume is building as well. So below this area, they went the 21,150 or 21,100. Volume tapers off pretty good. You can see TPO is not so much, a little bit lower, but here you can see how that volume tapers off pretty hard at the 21,100 to 130s. And so a low volume area around about 21,000 right now. We can hold the market together. But I would look to sell strength up to what 21,550 to 600s. Looking to buy weakness down to that volume edge here at the 21,120s to 100s. And if it starts trading below that, and then you have the 4 TPOs here at the 21,000. So 21,000 to 21,100 probably is a good area for support, and if that area comes out, they start trading below 21,000. Just stay on the short side at that point. We are heading lower. But that's kind of the range on the Nasdaq. Starting off, we are pretty much in the middle of this range. So I would look to sell strength against the 280s, 320s, 370s, 400s up to the 430s. I look to buy weakness against the 230s, 200s, 170s, down to the 130s for rotations back up. Below 130, I think we're heading into that lower volume edge and potentially into that area where we going to find some pretty good support. So yes, I would say below the 130s, I would probably lean on the short side or switch towards the short side of the market and see how far they can take it. And that's it. They are trading into that lower support area. So it could be support, but it's a pretty wide range though. So it's between that 100 to 120s all the way down to the 21,000s, which is yes, that's right shy of this support area. So in this whole area here, you have support. If the whole thing comes out, bets are off and we are heading lower. So that's kind of the way I'm looking at it. So we'll see. But so range bound trading on the Nasdaq to get started, same as the ES. Let's see if you can get some directional moves. And below that 130s, start thinking short side of the market. Above the 430s, start thinking long side of the market. See if you can run it higher up to the 500, 550s. All right, so that's the Nasdaq, and you can see Friday's range was pretty good. So, but now new month. Let's see if these little hedge funds are going to start accumulating some stock, or they're going to be all spooked and sell everything they got. I don't know. Usually coming into June is a pretty good month, and then you have some volatility in July, August. This year could be very different because you have potential trade deals coming out left and right here. So you never know when stuff like that's going to change up, and that the prevailing orthodoxy and how things are supposed to be working. Looking at the gold market. That's a little bit to the upside. So it'll pop here. There could be a start of a move out in the middle. I'm going to fold this together, and you can see here we're right at value at the 33.20s. Started there, heading up, taking out resistance at 55 in the 60s. So this is I would say this is start of a move out of the middle to the upside, and we'll see if it has legs. It could be very well that this is an overnight thing, in which case you'll see them retrace right back down below that 50s here pretty quick. And that's kind of where we are on gold. So that's my potential red flag. Gold trading higher like that. It's hard to say why they would do that, but there's some reason for it. Could be as the bank buying. Could be some concern about some. Could be some geopolitical concern. I mean, they had some stuff going on in the Ukraine-Russia war happening over the weekend. That I would stay on the long side and and assume it's going to take this higher. If it starts trading below that 33.68, the session lows or this London session lows, because that's been holding pretty good. That's a pretty good edge here, right here at the 68s. If that edge comes out, I would look for a retracement trade all the way down here to the 48 level, this support area, maybe even down to that 40s. So this whole thing can get retraced pretty quick if they take out that 68 level. So I would look to get short against early strength with a lot of caution for rotations back down, and definitely below that 68 level, then we look for that retracement trade. Now, if this is a move out of the middle, then you may see the test of 68, but not more than that, and then they'll just keep trading higher. So I'm gonna keep my eye out for that potential short setup. But not very aggressively. I'm looking to buy weakness at the 75s and the 68s to get started. And below 68, I get the confirmation that we are retracing. Right. So just to be clear, I'm trading that on the long side to get started, I'm not looking for an aggressive short here. But we've seen this a few times, when you see this big move in the overnight, and they can completely collapse. Looks like they're going to start taking it higher, and then they can completely collapse down here in the day session. So those are the two options I can see. We'll see which one prevails. and we know how to trade either of them and what to look for. Oil. To the upside, they're trading it up to what is upper edge now. It could also be related to the Ukraine situation. It doesn't look like neither parties, either they're posturing for better terms or they are just not going to play ball or want to stop that war. And we'll see. That's going to be that's the thing with wars. They just once they start, they are not easy to stop, and it's just a freaking shame. Anyway, so oil trading up toward this upper level, 63.80 to 64, and then we'll see if they can take out this upper areas. If so, we can see oil trade up here towards that 70 area again, 69.70. Could certainly happen. I mean, that could be disruptions in oil. Could also be related to the Iranians saying one thing and maybe doing something completely different when it comes to their uranium. It's hard to say what's going on there, but it's definitely a very volatile situation in that part of the world. So right now, I'm just looking at this as a range-bound market, trading higher in the overnight. But you watch that upper edge, 63.50 to 64, 64.20. That comes out and they start taking out this low volume area. We can head right up here to that attractor at 69. So that could be what may be starting to happen, but we'll see. They're still not quite there. So I would look for short setups against the they took out the 35s here, so 63.70 and then 64.20. These two resistance areas. Would look for short setups against those two. Above that 63.10 to 20, I would stay on the long side, and then watch them trade it up towards the 69s at that point. Low volume area could stall the market, so you can still stall at any level up here. But if you have some buying, if you have some structural buying going on, or some structural repricing going on because of geopolitical events, they'll take out this low volume area, and you'll see it up at 69 in no time. Initially, I'm going to watch for this as a more of a technical dynamic in short-term in nature. So looking for my shorts at the 63.70s and the 64.20s. Rotations back down. But if it is structural and something is going on there, then we're going to see them take out those areas and keep trading higher. And if they fail to take them out, we see a retracement back towards the 62s here. But right now, we just have to wait and see where they're going to go. But you can see in the overnight, there's been pretty good move to the upside. So I think that the most likely related what's happening in the Middle East, maybe Russia, or maybe both. So there you have it on oil. I would start from the long side of the market, looking to buy weakness at 63 and 62.60s for rotations back up. Looking for my shorts against that 63.70s and 64.20s for rotations back down again. Now, if they don't really trade higher, they just retrace below that 62.60s. Just take off the long bias and go back range bound at that point. So we're looking for them to trade higher, but if they start backing off below that 63, I would say 62.60s. I would take off the long bias and go back range bound and see how far they can retrace this. All right, so that's oil and gold. Back to the ES. And everything is kind of where we left it. So volume is about 180, so a little bit higher than normal. ES is at the 150, so but not crazy high in terms of how much volume is out there. So we'll wrap it there, guys. So a few minutes. No, we get nothing at 8:30. 9:45 is when we get the first piece on news. So we're gonna say good trading this first trading day in June, and we'll see you back at 11:30 for the next update later.